Hi there. Today I'm going to give you 9 ways that trading performance results can trick you. Number 7 was done by somebody who actually went to jail. And number 9 was what suckered me into trading futures in the first place. Plus, I'll give you a 10th bonus one at the very end. I'm champion trader Kevin Davey, and let's get started. First, before I unveil the 9 performance traps that people fall into when looking at performance results, let me discuss a few things. First of all, always treat all trading results you see as hypothetical unless they happened in your own account. So the simple rule, if it didn't happen in your account, treat it as hypothetical. And that means it may not happen for you the way it happened for somebody else, and that's important. The second important point is my rule with trading performance results is if it looks too good to be true, it probably is. And just incorporating that rule has saved me thousands over the years. If it's too good to be true, it probably is. And the third point is keep in mind the words of Abraham Lincoln, who died in 1865. Okay, with that, let's get started. Performance trick number 1 is looking at Twitter or looking at trading blogs or anything on the internet. Realize that people lie. They make up stuff. I've seen Twitter accounts with Photoshop statements, people who only trade sim, people who've traded on holidays and made a lot of money. How is that possible? And people who claim to make a lot of money trading stock splits when they don't understand the basic math behind it. It's incredible. So anything you see on Twitter, which is usually just people making money hand over fist all the time, just take it with a grain of salt because most of it is not real. The second way performance results can trick you is if you're looking at an optimized backtest. A lot of people show results of optimized backtests and the curves look great. Well, the only problem is it's an optimized backtest. Of course it's going to look good. What you have to realize with optimized backtests is that they almost never look as good going forward. And that's performance trap number 2. Performance trick number 3 I see a lot in internet ads, and it's when the person running the test did not include slippage or commissions. And this is especially true for futures traders. There's a lot of people out there who claim they can trade with no slippage and that commissions don't really matter, so they won't show the results. But the simple fact is that slippage is a huge drain on futures trading. It's one of the costs of doing business, but at the same time, if you don't include it, you're going to be a lot worse off. Here's an example where you can see how much slippage impacts the trading results. Now, in this case, you still had a profitable trading system, but a lot of times, not including slippage will be the difference between making money and not making money in the real world. So you always want slippage and commission in your trading results. Performance trap number 4 is having a short back test. So a lot of people will only test for 1 month or 3 months or a little bit of time because they want to show good results. And it's a lot easier to optimize and create a great looking back test when it's only a couple months long. What's tough is having a good back test over a number of years. So that's why you see those short back tests. And people will say, well, I just want to include the recent market. Usually when people are doing that is because it's the easy way out and it's the easy way to show good results. So watch out for that. Performance trap number 5 is a favorite of people who don't actually trade, and that's assuming limit orders are filled as soon as the price is touched. For those of us who've traded with limit orders, we know that usually limit orders are only filled when the price goes through your limit price. So a touch fill happens once in a while, maybe 10 to 20%, but you can't count on it. The problem is when you look at those results of limit order touch fills, the results are usually a whole lot better. And the reason for that with limit order touch fills is when you get those touch fills, all those are going to be winners by definition. So if you take a lot of those touch fills out, your performance gets a lot worse. So watch out for that one. Performance trap number 6 is when you trick your strategy backtesting engine. And all software, no matter what platform you use, can be tricked. And my rule of thumb is if you don't know your software well enough to know how to trick it, then you're liable to fall for this one. So the way to get around this one is to make sure you know your software well, or you work with somebody who knows the software well and knows the tricks, because they're out there and they will always cost you money. Performance trap number 7 is showing the results of closed trades only. There was a famous baseball player who did this with options trades, and he showed his performance with just closed trades. He buried all the open trades, which were all losers. And actually, Jim Cramer said this guy was one of the best traders ever. Yet, he really wasn't, because he was only showing closed trade results. Now, this baseball player eventually went to jail for some other financial shenanigans, but you get the point. You've got to show closed and open results. So here's another example of that with a system iTrade. Look at the closed equity curve here. It looks great, but when you look at open and closed trades, you all of a sudden see what the flaw in this strategy is. It takes little victories, but lets the losses run for a while. So if I only showed you the closed trades, you might think it's good. And if I show you the detailed equity curve with open and closed trades, all of a sudden this system doesn't look so good. So when you can, always try to look at equity curves that have open and closed trade information. Number 8 for a performance trap is looking at illiquid markets. So these are some of the lesser known futures, things like orange juice or lumber. And the problem here is sometimes the price jumps around so much that you're going to get a lot of slippage that you didn't expect. So it kind of goes back to the earlier performance trap about slippage. Illiquid markets experience a lot more slippage than liquid markets. And if you look at trading results, make sure to be especially careful if you're looking at an illiquid market. Performance trap number 9, I'll admit this is what got me into futures in the first place. I was shown a chart of sugar and how in a relatively short period of time I could have made millions of dollars trading sugar. And it was all true. The problem was, what it assumed was that you rapidly increase size as your account got bigger. And what it didn't mention was you were going to experience some huge drawdowns, over $1 million drawdown, if you did this particular trade. So it was a trap because yes, you could have made the money, but almost nobody psychologically would have been able to handle this. The emotions would have just been too great, the drawdowns too great, and basically it's just an example shown to sucker in new people. And I'll admit, it worked for me back in the day. I was suckered in by this particular trade. Okay, so those are 9 performance traps. Let's do one more bonus one. And this one is from a webinar that I saw where somebody was talking about how they trendline trade. And I'm not going to mention who the person is because it really doesn't matter. But the key is, look how I analyze what he said was a winning trade. Well, first, I look at the trend lines he drew and where he said he entered. Well, you can see his trend line doesn't even touch his entry, so his entry is bogus. And then if you think about how he drew the trend line, he didn't know where to draw the trend line when he entered. yet after the fact it's easy to show. So that's another mistake. And then when you look at the exit, he's basing that off a trend line, yet the price never touches his trend line. So yeah, it was sort of close, but it wasn't going to be a real trade. So what you're left with here is a bogus entry, a bogus exit, a bogus analysis method, and basically that means it's a bogus guru who's teaching you this. So you got to watch out for these kind of people, because they'll make it seem like trades could have happened, and in reality the trades probably could have never happened. Okay, so there's 9 performance traps that people fall into, along with a bonus trap. If you like this video, please give it a thumbs up. Maybe you have a different trap that you've experienced. Leave it in the comments. Or if you have a favorite trap that I discussed, tell me about it. I respond to all comments. And finally, if you like this video, please subscribe to my channel. That'll keep me creating new videos. Well, thanks for watching. I'm Champion Trader Kevin Davey. Have a great day.